Hi, I'm Jeremy Roll, and you're listening to the Passive Investor Show.
The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com. Hey PI listeners, this is John Fortes. I'm making it a point to speak to as many investors as possible. My goal is to position myself to be a blessing to my network through conversation. How could one be a blessing through conversation? The easy answer is by listening. A simple conversation can open many opportunities and doors. I always ask myself this: what do I have to lose by having one more conversation? Going back to high school, I've connected friends and family in my network to one another, even if it didn't benefit me. And I continue those same principles and practices. Why? Because it's the right thing to do. If I can't help you, I probably know someone or something that can probably solve your problem. I'd love for you to become a part of that network. Go to www.johnfortes.com, create your investor profile, and schedule a call. How can I best serve you through conversation? In the words of Clarence the Angel from It's a Wonderful Life, no man is a failure who has friends.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications and real estate funds. Our goal and purpose of this show is to be a resource to investors and help them master their passive investments by beating inflation 1% at a time. Welcome back, ladies and gentlemen. We're back today with Jeremy Roll. Jeremy started investing in real estate and businesses in 2002 and left the corporate world in 2007 to become a full-time passive cash flow investor. He is currently an investor in more than 60 opportunities across more than $1 billion worth of real estate and business assets. As founder and president of Roll Investment Group, Jeremy manages a group of over 1,500 investors who seek passive, managed cash flowing investments in real estate and businesses. Jeremy is also the co-founder for Investors by Investors, a nonprofit organization that was launched in 2007 with the goal of facilitating networking and learning among real estate investors in a strict no sales pitch environment. Phoebe is now the largest group of public real estate investor meetings in California with over 30,000 members. Jeremy has an MBA from the Wharton School and is licensed California real estate broker for investment purposes only, and is an advisor for Realty Mogul, the largest real estate crowdfunding website in the United States. Jeremy welcomes emails jroll@rollinvestments.com to network with or help other investors to discuss real estate and business investments of any size. Welcome to the show, Jeremy.
Hi, how are you doing? Thanks for having me on.
Nah, man, it's a pleasure to have you. I've seen you everywhere, and this is our first time formally meeting. And, I'm really, really excited to have you here because you're known as the passive investor king. I want to ask you to just share with you your background and how you got here.
Yeah, thank you. And thanks again for having me on. And, I'll say that I appreciate you mentioning the word king. I'm very, very low key. I will say that really, and I talk to people about this all the time, the only difference between me and some other passive investors is time. It's just I've been at it for like 19 years, or almost 19 years now. So thanks for reading the bio. So I'm originally from Montreal, Canada. I lived there for half my life to where I grew up. I've been in LA for mostly the other half of my life. And I started investing passively in real estate opportunities for cash flow back in 2002 after the dot-com crash. And that's what happened back in 2001 was I was, kind of sick and tired of the stock market for two primary reasons. One was the volatility of the stock market. I'm a very low risk, slow and steady guy, and to watch it go up and down 30% in a year was not a good fit for me. But probably more importantly was actually the lack of predictability of the stock market in terms of me not knowing where my retirement account would be in like 10, 20, 30 years and not having that predictability. That's actually what bothered me the most. And so I ended up looking for more. I kind of concluded that the better fit was lower risk passive cash flow that was stabilized, that had more predictability. So really what I mostly focus on is predictability of cash flow. It's my number one focus. And so I started investing in these types of opportunities back in 2002. It's been almost 19 years now. And I was fortunate enough that the cash flow got me out of the corporate world back in 2007. So I've been a full-time passive cash flow investor since 2007, but been investing in these types of deals since 2002.
Now, what were you doing in that timeline, like as a main occupation?
Sure. Yeah. So my last corporate job, I was actually working at Toyota headquarters. My last role was in finance. I was supervising a team of pricing analysts. But prior to that role, I was in marketing on next generation of in-vehicle technologies at Toyota headquarters. And prior to that, I was actually working at Disney headquarters in marketing across all their brands. I was the Canadian brand manager across all the DVD and VHS products, literally, which I don't know, depending on how old people are, they may not even know what DVD and VHS is. But I was working on that for several years before. And then there was stuff, before then too.
So what did your first passive investment look like? How's it compare to what you do now, how you look for deals now?
Yeah, great question.
Or look for deals that you're investing
Great question. So I was in a bit of a unique situation for two reasons. One is my first passive investment was actually in Canada, not the US. Being from Montreal, the first challenge I had when I was pretty new to the US, so I moved to the US in 98 to Philadelphia, did my MBA and finished in 2000 and moved to LA in 2000. So if you kind of think of the setup, I had been in LA for like a year and a half and I started looking for passive opportunities. So I was pretty new, especially for this biggest city. And I didn't know who to trust. And trusting and figuring out who to make a bet on, as I've learned over time, is the most important thing, even more important than the property, in my opinion. So I had a unique situation where I had people in Montreal I'd known for a long time who had actually been syndicated for one to 2 decades at that point. And they were lifelong friends of my family. I knew the sons for since I was 5 years old. So I started investing with them because I knew I could trust them. And I also knew I'd learn a lot from them, probably more so than a normal person would be learning from a normal syndicator, right? So I kind of went with the path of easiest to trust and the most learning to start. And that ended up taking me down office, retail, and industrial with them for several years. In fact, I have many investments with them still. I think I still have 9, with them right now. And so I've since invested over 20 deals with them and learned a ton, but that's where I started. Now, interestingly enough, fast forward to now, which we're recording this, I think in November of 2020, amidst COVID and everything else and all the work from home. And so for the next 10 years, ironically, the 4 asset classes I'm probably targeting as primary, like tier A, are mobile home parks, self-storage, apartments, and senior living. So you'll notice that the stuff I started with isn't actually what I'm currently focused on, right? For many different reasons. And so, but that's where I started. I was very fortunate to be in that position. And it was just lucky for me that I had someone I can actually kind of learn from and trust to begin with.
Now, if you didn't have that path, what would you have done?
Well, actually, I'll tell you what I would have done, which is pretty much what I did in parallel. Okay. So between 2002 and 2012, say, which is a long time, I probably went to, average 2, sometimes 3 meetings a week in LA. And what I did was essentially network as much as possible. And I did that in tandem with learning at the same time from them. But I went to a ton of events in LA to build up my network. And that's what I recommend to people. Now, first of all, we're in the middle of COVID. You can't necessarily do that in person at the moment, but you can do virtual meetings and stuff, which is great because now you can actually attend all different types of meetings you wouldn't normally be able to across the US, which is very unique. Obviously, networking isn't as easy in those meetings, but you can still get some done, especially if you target the meetings that actually purposely enable some networking and try to make it happen. I was in a unique position in that I was young at the time, not married at the time, no kids at the time, and also was in a big city where there were a lot of meetings, right? So a lot of people aren't in a city that have nearly as many meetings, but they could still probably find some meetings in the area. And frankly, if you live in an area where there are no meetings, I would actually encourage you to start meetings. That's actually what I did. And I started meetings for a different reason, but it's a great thing to do. It can really build your network, and you get to actually choose and tailor the topics and even the general meeting topic to precisely what you're looking for, which is great. So that's what I would definitely have done with or without that other piece that I had. And that's what I recommend to other people too.
Man, that's some great advice there. Now, what kind of, I always talk about investors having a criteria, and even sponsors have a criteria. What is your investment criteria when it comes to multifamily
Sure.
investing?
So, I will say this before I answer your question. I absolutely convinced that everyone's got to do what's best for them as far as the best fit for them, right? Some people are looking for max returns, don't need cash flow, want to do only development deals. Some people like me want to be on the exact opposite side of the spectrum, 80 to 100% occupied, stabilized, highly diversified tenant base, experienced sponsor, and more predictable cash flow, as an example. And there's everything in between. So there's 1,000 ways to invest. None of them are necessarily wrong. And so I'll tell everybody what I focus on. And I think it's very important that people really define and understand and create a box for themselves, because it helps you to filter. It helps you to really only focus and spend time on what is a proper fit for you. So you're not wasting time on stuff that may or may not be a fit for you, right? So I focus on, as I mentioned, stabilized stuff. I focus on Class B multifamily, 100 plus units for diversification, experienced sponsor who's got at least 5 to 7 or more deals under their belt, preferably more, right? And a number of years or more. I focused on what I call A- or B areas. So you're not going to find me in LA. You're not going to find me in Manhattan looking at opportunities, because those markets are too volatile. And in other words, they go up a lot and they go down a lot in the cycles. I'd stay away from what's hot as well. So that changes over time. But a great example right now, because we're kind of at the end of a cycle that just happened, is Denver and Seattle. Prices skyrocketed the past few years. And I love those cities. I've been to both in the past couple of years. I love them. But I have not invested in them for years or looked at considered deals in them for years, because the cap rates have been too low because they were very hot, right? So I tend to try to stay away from what's hot, go in more stabilized markets. Middle of the country would be a great place for me to look, in the right type of city with enough population base. I'm going to be in a place that's kind of either a primary or secondary market within that area, but not a tertiary market typically. And I don't go for Class C and I don't go for Class A most of the time. And that's pretty much my defined box. So you can see, without getting into like target cash flows, et cetera, like I've already defined a very specific box. And what that allows me to do is avoid spending time on stuff that just isn't a fit for me. So I think it's really, really important people to create a box for themselves and really spend enough time to the point where they can get to that point where they know what they're looking for.
Yeah, I think a lot of people, when they come in, they start to look at that IRR is too low for me, and they don't have that defined metric where you saying what's the asset telling you first, and then start looking at the numbers. So I love the way you take that stance on that.
Well,
as we go ahead.
Yeah, I was going to say it's a really interesting point, because I'm guessing a lot of people filter by the returns first. I didn't even mention the returns first, right? The first thing is it the right type of criteria for me? And under that criteria, is it the right returns? Not, is it the right returns? Then does the criteria fit? Because I think if you take that approach, you're going to end up with some deals that aren't the right fit for you. And I think the criteria, arguably, to begin with, is much more important than the returns, because the returns can be manipulated by assumptions. So I think that getting that criteria down is very important. So thanks for bringing that up.
No, thank you for sharing, because you highlighted that. And man, so moving on, Jeremy, when you start reaching out to a new sponsor, what stands out the most as you start getting attracted to, networking with a new sponsor or onboarding with them?
Sure. So, first thing I'll say is I prefer to stay away from the crowd. So I like to find sponsors who are a little bit under the radar, who maybe have been operating for a long time and have a lot of experience. The number one thing that attracts me, though, always is someone who's conservative. Now that is two reasons for that. One is because it matches up really well with my personality, so it's a good fit for me to work with them. And then the second reason is because I strongly prefer someone who has conservative projections, just to set lower expectations, even for myself, so that I understand where they're coming from. They're being realistic. And I think that actually affects how they operate and how they think across the board. So I guess the best way to describe it is I'm looking for someone who's looking to underpromise and overdeliver, to build long-term relations with investors, so that I as an investor will repeat invest with them multiple times, to build up that investor base. I'm trying to avoid people who are really good marketers, but who are overpromising, using very big numbers. And to your point, having those investors look at the return first and see, oh, wow, great return. I got to really dig into this. And then potentially under delivering because they're overpromising, or at least having a higher probability of getting to that point, but not caring as much because they have a really good marketing machine and they're just going to find the next investor. And that's one of the reasons why that, look, there's a lot of great operators who have a really good marketing machine, but the fact that they have a marketing machine also means it gives them the opportunity to kind of overpromise, but not necessarily have the same repercussions. So that's why I tend to, by default, prefer someone who isn't a marketing machine. I don't want to be prejudiced in that I'll look at everything, but it's an interesting way to look at it if you think about it.
No, I love the fact that you said that, because one of my mentors when I was in the IT world, She told me under promise, over deliver. And that's how I always carry myself. So the fact that you brought it up here is just like bittersweet for me. So
Oh, very, very
I
nice.
appreciate that. What are some unique onboarding processes as you started connecting with sponsors that are doing these type of deals?
Sure. So it's interesting. I've been around for a long time as an investor. I mean, I started 10 years before crowdfunding rules were even finalized, never mind when the sites launched. A lot has changed, right? In fact, I mean, the 506C deals that allow people to publicly market opportunities, they weren't available, I think, till 2015, if I'm correct, or maybe a little bit earlier. But the bottom line is that a lot has changed. So the most typical onboarding process I see today is someone using a portal where a lot of the portals, and a lot of them are actually similar because they're using the same back-end software, so to speak. The most unique onboarding process that I can remember ever seeing, though, was someone who had a portal who had me sign up, and then when I invested in the first deal, they sent me a coin, and the coin was actually unique to this specific property. And every time you invest in a different property, then you get a different coin. And when I say coin, I mean, like, I don't know if you can see in my hands, but like very large, like medallion, I think is probably a better way to put it. It was really a medallion in its size. And I just thought that was unique. It was interesting, very different. I've seen some operators who send like annual holiday gifts. I think that's very rare, but it does happen, but it's very rare as well in my experience. But from an onboarding perspective, the most unique thing I've ever seen is that medallion for sure.
That's pretty cool. Thanks for sharing that. Now, I think we already touched on it a little bit. What are some of the mistakes that you see passive investors make, and how can you avoid them?
Yeah, great question. So, all right, I'll share a few here but I'll try and keep it quick. So, number one is I think a lot of investors tend to listen to a lot of podcasts, and I think the podcasts are great, but it's very important to separate how popular someone is in their podcast with how good they are necessarily at being a sponsor, right? Because a lot of people have built up very large podcasts and have huge brand equity and have very big followings. But sometimes I talk to the investors and they don't necessarily dig into the details. They kind of just trust the podcaster, so to speak. Now, we're on a podcast right now, so I'm not putting podcasts on. I've been on over 100 podcasts. I think they have tremendous value for people. They're free. It's pretty amazing that people can log on and listen to you and all the stuff, all the content you're creating and all these other podcasters. And it's amazing that it's free, right? And it's an amazing value for investors. But just make sure if you're an investor that you're separating your opinion about how well the podcast is run versus how well somebody might run a multifamily deal or any asset class, because that's two different things. So just make sure you assess them really comprehensively. That's number one. Number two, background checks. Very rarely do I hear of an investor doing background checks. It's really rare. It's shockingly rare, actually, to me, and I think it's very unfortunate. I have a rule that I run background checks every time I invest with a sponsor, even if I'm reinvesting with a sponsor again, because something could have happened in between, and it's actually a hard rule for me, and it's actually saved me a number of times, very obviously. And so over the years, so I would highly encourage people to, you're spending a lot of money investing with somebody, you're making a bet on them, you're giving them control. Once you give them control and your money's gone, it's very liquid and it's very hard to get back. So I would strongly encourage people to run background checks. I think it's very critical. Let's see. Another thing I think is that a lot of people probably don't read the legal documents, right, and understand the rules. Now, I can understand that most people don't like reading long legal documents. Some people find them boring. Some of them find them very difficult to understand, and I totally understand all that. But I will say this. Think of it this way. You're giving control to somebody else. If you don't read the operating agreement, you won't understand the rules. And if you don't read the PPM, you won't understand all the risks necessarily, right, or you won't consider them. So they're both very important. I think the operating agreement is particularly important because I've seen all kinds of stuff in the operating agreement. Sometimes it's even different than what the sponsor will tell you, either purposely or even more commonly, just because their attorneys put something in there that they didn't even realize was in there. And sometimes I catch them and they're like, no, that's not the way it works. And I'm like, no, here's your documents. That is the way it works, right? And it may not be how they're going to operate or what their intention is, but the legal documents are the bottom line, right? If you ever end up in a really bad situation, all you have to fall back on are the legal documents, which are the rules. So be sure to take the time to read the rules. I have seen crazy rules that have made me not go into an opportunity, like shockingly bad, that were purposely put in probably, that would tell you exactly who you're dealing with. That's pretty much as bad as finding a bad background check, right? So I would strongly encourage people to read those documents. I'm assuming most people don't. So.
Man, that is awesome. So awesome that you shared all that, because now I'm not even going to ask you what's the one piece of advice for PI listeners. I think that is like, that takes the cake home with it. But man, Jeremy, how can we stay in touch with you?
Yeah, sure. Well, feel free if anybody ever wants to network, or if I can help anybody for any reason, feel free to reach out. Best way to reach me is my email, which is jroll, JROLL, at Roll Investments, ROLL Investments with an S.com. So jroll at rollinvestments.com. That's definitely the easiest way to reach me.
Now, my last and final question is, what is the meaning behind your company name?
So you're talking about foreign investors by investors, I would imagine, right? I have
Absolutely, yeah.
Roll Investments, but just to clarify for anybody out there, that's my private investor group. Foreign investors by investors, the public investor meetings that I co-founded, right? So we're nonprofit. So the whole purpose of foreign investors by investors, and thank you for asking, because it actually does add up as to why it's called that, is I went to, as I told you, many meetings between 02 and 07, and a lot of them were sales pitches. And so the way that I kind of got around that, because I really wanted to network with everybody at the end, and some of them were well-organized sales pitches that had hundreds of investors. There could have been 500 people in the room. Amazing networking, but the networking always happened at the end. And so what I would do while I was in the corporate world is I would bring work and sit in the last row and literally do my work for 2 hours. I'm not exaggerating. I didn't have a computer, but like I had documents and everything else. And I would just do work, some of it on my phone, typing up stuff. And then when it was done, I would go around and network, right? I would pay no attention to the sales pitch. Well, what happened is the first time after I left the corporate world, I went to this meeting. I remember exactly where it was. And I sit down and I literally say to myself, oh man, it's a sales pitch. I don't have any work to do. I'm about to waste 2 hours of my time. So the point of foreign investors by investors, I said to myself, instead of wasting 2 hours, I could start my own meetings where the core foundation is there's no sales pitch, right? And that's how that was started. So if you think about the name foreign investors by investors, it's for investors by investors, meaning that there's no sales pitch. We're doing it for ourselves, and we're trying to avoid the sales pitches. So that's where the name came from. Sorry for the long explanation.
No, I love it. I love it. It's my favorite question. Jeremy, as you can see, we brought you on to just talk about passive investing, and that's what we focus on here. And now the audience knows why you are the king passive investor. Thank you, man.
Oh, yeah, no, thanks for having me on. I hope this is helpful for people out there. Hopefully this is helping the listeners.
I appreciate you. Don't forget to download your free copy of the investment tracker. It allows you to track up to 5 investments, compare sponsors, markets, and most importantly, projected versus actual returns. To get your copy, go to www.projectedreturns.com. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. Remember, if this episode helps you, you can help us by leaving a review on iTunes. I hope you feel compelled enough to share it with someone you think this would resonate with as well. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet. Happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.